Hello and welcome to another episode of Get the Money Moving with me, Emma Jones, Small Business Commissioner, and I am very delighted today that we have in the form of a huge Fair Payment Code champion and a payment ambassador for us, Dan Foley of Kier. Dan, such a warm welcome to this podcast.
Thanks so much, Emma. I'm really looking forward to this actually on that.
Well, you are such a big payment ambassador, Dan, but just so everyone can get a good sense, just tell us about your role at Kier.
Yeah, so I'm the Group Finance Shared Service Director, and I'm responsible for cash operations, which is cash in and cash out effectively. So as you can imagine, we're just over 4.2 billion pound operation. Wow. So it's the actual billing of that and the collecting of it. Now, last year's accounts, we paid out 3 billion to our supply chain. 2.3 billion of that went to subcontractors, and the other 700 million went to direct services and goods and suppliers of that nature. I've also got responsibility for some of the financial accounting activities, making sure the controls and the compliance is there to fall in line with UK legislation. And the last one is taking a leadership role on our digital and data activities to ensure that the service we provide to our customers and suppliers is maximised and is future-proofed in 21st century as possible.
I love it. That's a lot of invoices going in and out then, Dan, with that much. I was trying to figure out when you were saying those figures that you're a £4 billion company, 3 billion spent on contractors. So is that £1 billion in profit?
No, but don't forget we got to pay our people as well. And cash and profit are very different bedfellows in their own way, right? Revenue is sanity. Profit is revenue is vanity. Profit is sanity, but cash is reality. And I think that's what we should talk about today, probably, with what we can do to help out.
Perfect. Well, that is exactly what we'll talk about today. And Dan, I mentioned this in the introduction, but you have been a huge champion within Kier and indeed across the industry on the importance of fair payment. So why is this important to you and the business for which you work?
There's a personal and a professional element to it all. I think the personal thing is, as an accountant, doing the right thing is so important. And our integrity and value set in any of our articles of association set out that doing the right thing, regardless of what it takes, is the right thing to do. It may be the longest thing, it may be the hardest thing, it may be the most difficult thing, but it's the right thing. And I think that's my personal perspective. Professionally, basically, as an organization, we operate today in over 400 sites in the UK, Emma. And the services we provide are across construction, infrastructure, and a breakdown infrastructure you could be on a highways contract, we could be doing some work at the side of the road, we could be working basically on the water network, we could be working on some of help supporting our defence industries. There's so many different parts to our organisation, but we don't all have the skills in-house to do these items, and we rely on our supply chain to do that. Last year we have 11,710 suppliers on our actual database that are live. And basically, we undertake 6,000 payment runs a year. 3,000 of those are BACS payments and 3,000 of those what we call manual payments as part of what we do there. We have 350,000 invoices that come into us. So we can't operate without our supply chain. And sometimes we're in very specialist parts of the industry where there's only a few suppliers that do that. So it's really important we work proactively with them to support us. The UK government has set out, as you know, a 725 billion 10-year infrastructure roadmap to put the great back into Great Britain in terms of that. And what's really important is who's going to help them out along the way. And we see ourselves as part of that. I have been there in the days where I removed Kier from the precursor to the Fair Payment Code, the Prompt Payment Code. And if there was ever something that was badly named, it was that. It should have been, have you paid on time code, rather than that. And I removed this because we weren't paying our supply chain to terms, and there was an integrity of what we did. And we've built back up bit by bit since then. On the ground, when you go on sites, the supply chain are core to what we do. They operate, and health and safety is absolutely critical. And by getting the best health and safety activities there, you ensure that you work proactively with your suppliers. And if you're not paying them to terms or not working with them as an organization, then they have plenty of options to go. The UK has got a huge development agenda, and suppliers are in very high demand. So we've got to make sure that one of our actual reasons for them, we want to be a partner of choice, we've got to make sure we do many things. And one of them is paying them to terms.
Pay them on
Last
time.
week, in time. Last week, I attended a session with our infrastructure business. And our infrastructure business turns about 2.3, 2.4 billion a year. And we had 150 of our top suppliers in the room. And I got asked to speak. I had 3 slides, and the third slide was all about the Fair Payment Code. And it was all about why it's important, what it does, and what it's there. And I've got the scars on my back from the bad days, but I've also got the actual the release on my shoulders from the great days. You know, I was really proud to put up our payment stats online for the duty to report for the last 6 months, and we've just sent out our first draft to the business yesterday to get ready for the next payment details in there, Emma. And I said to them, look, we're paying 97% of invoices to terms, volume, and 98% in value. And that's great going on that line. And we're now basically turning our hands to the small, the SMEs and the small suppliers as well, to get them onto the next stage of that payment improvement process. And it becomes a mantra and a drumbeat. It never stops. We've got to find ways of interacting better throughout it all, working smarter, utilizing technology, but ensuring at the end of the day that whether it's the big supplier or the guy in Belfast who's got one digger that we pay every week, doesn't matter who they are, they all have the same respect in my view. And, you know, 1 out of 11,710, if they're not happy, I'm not happy.
Amazing. Dan, I just love it. Every time you speak, I'm like, I need more Dan Foleys in my life. But you've mentioned the number of suppliers. So Dan, let me just check. You can identify SMEs in your supply chain then, can you? And if so, how does Kier go about doing that?
We do a few things. So number one, when we have a contract, a local government contract or a central government contract, there are often terms in it that talk about what percentage of spend will you be making with the SMEs. So we've got commitments there. Secondly, 400 sites in the UK, they're not all based in central Manchester, they're all over the UK. So we have an opportunity basically to impact in communities. So it's not just the work we do there on a day-to-day basis, or when we finish a piece of work or go on to the next thing. You want to leave behind a legacy. And what's really important is cash in the UK flowing through the economy is really important. So identifying those comes through 3 real ways. Number one, the government contracts tell us to do it. So we've got a very adept business units and the commercial directors and the commercial teams who know who they want to work with and how they want to do that. The second thing, when we onboard people, we make absolutely sure that they flag as whether they will determine themselves, are they an SME? The third thing we do is we take a feed from basic Companies House and Dun & Bradstreet. We use a bit of WYSI logic, AI activity come together, and the 3 of those check it all. And that gives us a 3-way flag in our systems to make sure that they're there and available. So when we at the end, our financial year has just ended, we've got to go back and be able to report on our financial accounts, what level of spend was made with the SMEs. We're already starting the actual analysis of that to see what's there for it all, because it's not just the actual needs at year end, it's the day-to-day basis as well. And if we want to make a change to payment terms across a contract or something of that nature, we need to be able to have those flagged that's there.
Amazing. So for those businesses who say, oh, I can't identify SMEs in their supply chain, there's no reason for that not to happen, because if a £4 billion company like Kier can do it, even if you're big, it's possible. Okay, that is great to know. And Dan, I know that you're on top of all of the legislation that we're trying to take through Parliament, or that the department is taking through Parliament at the moment is making really good progress on. For a business like Kier, are you already starting to get prepared to be compliant with the new legislation for when it comes in? So for those who are listening, this is 60-day maximum payment terms, automatic interest on late invoices, and of course in the construction sector, the use of retention payments. So is this something that Kier is already looking at to say, right, let's get our house in order so we're compliant for when it comes in?
Yeah, so look, the first thing is, I think I was with you on the 24th of March where Peter Kyle talked openly about it. And a lot of people have worked very hard to get it to this stage. First of all, I'm amazed at the speed of this, how this is going through the legislative details. We're at committee stage, checking last night, in the House of Lords, very quick, getting a lot of sponsorship in there. My view is that I think this will be in place by the end of the year. I think there's a real want to push this ahead in there. Now, what does it mean? A lot of the stuff that's in there is stuff that's good governance. Talking to our main board and the board of directors, twice a year, I do a note to our CFO, Tom Hinton, and Tom's come in and joined. He's a real massive fan of this. And he sponsors that to the main board, making sure they're very aware of what's going on. Our chairman is very, Matthew Lester, very astute, very understanding, understands how this business operates, and he is very core to getting the detail there. The other elements, they're great practice. Payment to 60 days, we've already gone in and changed any terms that were above it and removed all of those. And our group treasurer has been helpful in that regard. I suppose basically, 60 days, will there be more come out? I'm kind of preparing the ground to say, look, maybe the next government, maybe it might be there, maybe by the end of 2030, somebody will say it's 45 days is the maximum terms there. We know that a lot of the industry representations are saying they want even more reductions, as you well know. The elements there about payment of late interest, that's no problem. If that's got to be, that's got to be. We've had late interest payments in the last 2 years, small amounts, but still, though, basically stuff that was there. And I think we've got to take the learnings from that. We've actually got a marker that actually says every month how many times has it happened. I'm glad to say in the last 3 months, we've had nobody at all has come near us in that line in there. The other elements there, you talk about disputes. I think the one thing about the construction industry, Emma, is that disputes are covered by the Construction Act, and that probably takes us outside of there. Yep. However, the other one then is retentions. Build UK have been a massive lobbying body on this, and I've attended a lot of their details, and it's very clear around the line in that the day of retentions is gone. And they were there for a reason at a moment in time, and that the industry and the government wants to move there. And I think the industry wants to say to the government as well, okay, if we're letting go retentions, we need to be doing something similar. So I think they will come together. We're awaiting the legislation on that to see what it's going to look like. That's there. Yep. But the biggest thing for me, basically, is the drumbeat of communication. This shouldn't be a one-off item. I've got some comments ready to go at the end of this month when we file our duty to report to say, look, guys and girls, it's changing more. This is coming down the line. Here are the 5 or 6 things you need to know that's there. And also your role, Emma, and your team's role. You've got the powers you wanted for years. You've got the support that's needed, that's there. And you do often a thankless job in getting us through the line, a lot of these items, and the people who are before you in those roles as well in that line. So we are preparing the ground. I think it's fairly straightforward. The legislation will come out. We've got to be ready. We've got to be ahead of the game in some of these items because people will look for us in leadership in the industry on this, and we should do our best in that regard. However, what I would say to ourselves, like everything else, it's finding our way through it all is really important.
Lovely, beautiful. Thank you, Dan. Let me just ask you, for those small businesses who may be contractors to Kier or to other large companies, what are the most common mistakes, Dan, that you see in terms of why a payment is held up? So is it on the invoice submission? What are some of the things that you see that small businesses should just be aware of when dealing with larger contractors?
Look, Emma, I don't think it's industry specific. I think I've had the benefit of working in global organizations, and I put it down to a few things. Number one, can the supplier get the invoice to the actual contractor? Number one, and there are a plethora of reasons for that. So first of all, is the invoice available there? Is it in the system? And I think that's where basically, the government's view on making tax digital is going to come into play. The coming in 2029 of e-invoicing, whereby everybody, by and large, I think there might be a few exceptions like everything else, but everybody in the main is going to have a four corners approach to getting an invoice into the system. Once it's in there, great example, we have 350,000 invoices a year. 300 come through an industry portal called TradeX. So people utilize that. The other 50,000, they come into as a PDF. So we have a PDF reader that gets that, scans the data and uploads it on our systems. So I believe going forward that the excuses about invoices not being in the system are less. Right. And they'll be zero by the end of 2029.
Yep.
So you're then basically, if the invoice in the system, what do you do with it? So what does it need? We operate a fairly stringent control system. So it needs a purchase order, it needs a goods receipt in the main, and it needs an invoice, right? So when we run our routines in day one, that's often what's missing. The invoice is there, purchase order may not be there or hasn't got enough credit on it, so you go into internal stuff. You then basically have to go and check the goods receipt. Goods receipting, to me, is the hardest thing to do in our sector. Because I keep saying to people, where are the delivery dockets? Yeah. And I always jocularly say to people, they're in everything but in our systems, right? They're in the back of vans. They are crunched into the into seats. People have written things on them to go down to the local bookmakers to put a bet on that weekend. The messages from somebody's rang through, says, "Can you go get the messages or do some shopping tonight?" They're never there. So the industry's got a challenge. How does it find a technological solution can scan these items and that automatically uploads the goods receipt into the system and takes away the manual intervention for it all? And I don't believe we've found that yet, but that's probably going to be the big one that's there. So if you've got basically then, you've got your goods receipt, you've got your invoice, you've got your purchase order, well, then on a normal basis, why wouldn't it get paid? Well, subcontractors need to have an insurance certificate, and that certificate's got to be valid. So what we try and do is we try and get for the subcontractors, which is the majority of 2.3 or 3 billion, we got to try and get everything done by day 21. Because that gives us 7 days, effectively 5 working days and a weekend to run the back payment on 28 to pay them on 30 days. And that's where the struggle comes in. Because at that stage, I'm going back 7 or 8 years ago, often only 45% of subcontractor payments are ready to be paid in day 21. Now, we have a track record of getting to almost 100% of paid by day 30. So how do we make up that 55% in 7 days, which 2 of those days are weekends? Yes. And that's where we're getting better at it. Now, that actual level is up to nearly 81% this morning looking at it.
Wow.
But there still is 19%. And I think it just shows that as an industry and as an organization, we're getting so much better at these items.
Yeah.
The last one then, it's in the system, it's matched, ready to get paid. And in reality, that's where basically your finance and commercial team come in then. Because I have no authority for duty because of segregation of duties to approve that payment. I administer the payments, but I can't approve. So then I rely on a finance or a commercial person to approve that. And sometimes there may be disputes going on, as you know, and then sometimes there may be challenges over elements that are there. And people often use these as bargaining positions, in my opinion, wrongly so, but basically use them as bargaining positions. And that's the third element that's there and at all. And I think if those 3 are to work, it's the case of that right first time approach. And I just think where technology will make a massive difference, Emma, is that we're going to end up with invoices in the system right first time. And I think then it's all about future looking. How do we get them paid effectively then?
Love it. I totally agree with you on an enabling technology from e-invoicing. And I think it's really interesting. And I'd love to think that somebody would listen to this and identify this gap in the market that you've mentioned of technology to get those receipts more efficiently uploaded. Love it. Dan, my final question to you then is, you've mentioned the Fair Payment Code. We are delighted that Kier is on the code under your leadership and championing. What one bit of advice would you offer to other large companies who are thinking, is this the right thing to do for us?
So I don't even think it's an option. First of all, I am surprised that less than 700 legal entities have signed up. I really am. I believe that somewhere along the way there's a trick being mentioned here. Being signed up is not a badge of honor. It's doing the right thing for the UK economy. And, we have a commitment to our employees, our customers, our shareholders on the stock exchange, the board, being part of this. And we have 5 of our 6 entities. I've got 1 more to go. And I'm pushing really hard to get there. I want to get 6 out of 6, Emma. So I don't think I'm surprised, number one. The second thing is, sometimes organizations, sometimes there are leaders and there's laggards in that line. We weren't the first cab off the rank. We wanted to see what it was like, but we engaged with your team. And Jackie and the team were great, and they talked us through what to do. And then we had to engage with, find suitable referees and talk to them about it as well. And ensure that they were prepared for a conversation with yourself. And we started at the bronze level. And because our next challenge in the next 2 years, because, it's a 2-year basis of holding your actual certification, is that when we reapply on the 1st of October 2027, we want to be applying for silver.
Lovely.
That's our aim there. Also, I think if it's to get teeth, maybe what's going to have to happen, and we're seeing this bit by bit in new tenders coming through, say, are you on the Fair Payment Code? If you're not, what are your plans and what actual accreditation are you there? In the past, the UK government made it a criteria that for all contracting tenders over £5 million, as provided publicly, you had to be a authorised signatory to the prompt payment codes. I cannot believe that that's not going to come with the fair payment code at some stage as well.
Yeah.
The last time I would say, basically, just because you're not on it doesn't mean you should shy away from it. Excuse me. I believe that you need to understand that this is good governance, and it should be held up as a badge of honour within the industry you operate in. It should be held up as something that is standard, and also something that should be aspirational, and that you do better and better all the time. Because this 725 billion investment in the UK in the next, we talked the 10-year plan that came out last year. Everybody should be a part of it. There's opportunity for everybody, but we all have to show what we're doing and be transparent. And one of the elements of that is to show that transparency is to say, where are you on your health and safety requirements? Where are you on your corporate governance? Where are you on ESG? But also, where are you on good practice supplement on your supply chain? And the last thing I would say, it's all out there. If you don't know somebody, come to me. Quite happy to help out or point you in the direction. Beg, borrow, and steal. A lot of these items are out there. And also, let's not be aware of the use of technology and the opportunities to make this more transparent at the same time as well.
Love it. Dan Foley, thank you as ever for your brilliant championing of fair payment, prompt payment, what you're doing with Kier, but also wider across the industry. Dan Foley of Kier, thank you so much for joining me today.
Thanks so much, Emma. Really, really enjoyed it. All the best, everyone. Bye-bye.